This is Ken Boyd, the owner of St. Louis Test Preparation. This is a recording about one of the blogs that I recently posted that I think does a decent job of explaining sales mix. So this is the website, stltest.net. You can see in the top right-hand corner that this happens to be the page for my blog, Accounting Accidentally. And you'll see that we have an RSS feed and that the blog I'm going to talk about is rice, corn, and soybeans making decisions about sales mix. I'm going to pull it up in the Word document that I use to create the blog. And first of all, for starters, sales mix is defined as the proportion of your total sales that one type of product represents. So for example, if your shop sells 1,000 red shirts and 2,000 blue shirts, red shirts represents 1/3 of your total sales, or 1,000 over a total of 3,000. Or another way of saying it, because sales mix is normally shown as a percentage, that proportion is shown as a percentage. 33% are 1/3 red shirts and 67% blue shirts, and the sum of those percentages adds up to 100. Now, why are we talking about it here? Well, sales mix is an issue because nearly all businesses sell more than one product. And to complicate matters, different products have different levels of profit. And by profit, I'm talking about, for comparison purposes, profit margin, which is defined as profit in dollars divided by sales in dollars. And you can go to our financial ratio videos in the financial section of our YouTube channel or on my website to find out more on ratios. So let's think about a practical example. Let's say you make a 20% profit on red shirts and a 10% profit on blue shirts. And your goal obviously is to maximize total profit among all products. And let's say for right now you just have these two products. If you shift your sales to the product with the higher profit margin, red shirts, your total profit will go up. You're selling more of the product that makes you more money. And I was reminded of this when I was reading a Wall Street Journal article that farming is a great way to illustrate sales mix. And in fact, one of the areas that's discussed in this Wall Street Journal article is an area where my dad grew up, northeastern Arkansas, the northern part of Arkansas that's flat as a pancake that runs along the southern border of Missouri. And if you think about a farmer, he has a big decision to make. That decision is, how much of my available land do I use for each available crop, each crop that I can possibly grow? Because a farmer can produce different products with the same land. And the question is, for the farmer, what combination of product and land use will create the highest total profit for the firm? So the article I'm referring to is from April 2013 in the journal titled, Farmers Lose Their Taste for Rice. And the fact that at this time, farmers are shifting away from rice production. And the area we're talking about is Louisiana, Arkansas, and Mississippi. And I'm particularly familiar with the area of northern Arkansas, where I know they grow these crops. The farmers in those areas have a choice. They can grow corn, soybeans, or rice. Now, there may be other crops they can grow, but we'll limit the list to that for right now because in some of these areas they also grow cotton. But we'll limit it to these products. Now, there are some factors that are causing farmers to move away from rice production. First issue is price. A comparatively low prices for rice, comparatively low. We've had recent droughts. The last summer 2012, was a very serious drought where I am in Missouri and throughout a lot of the country. Well, because of that drought, corn and soybean prices spiked up because less crop was produced. But rice prices have not increased at the same rate, and I was surprised when I saw this. It said, according to the article, corn prices have increased 50% since 2008. I've got a typo there I need to correct. Since 2008, which as of the writing of this article is about 5 years. While rice prices are flat during that same period, I was shocked to see that with a drought, there hasn't been less production and more demand for rice, forcing prices up. Really surprised to see that. The second issue is it's simply more complicated to grow rice. Rice is more labor intensive and it requires more farm equipment per acre than corn and soybeans. That's because rice has to be submerged in 4 to 6 inches of water for most of its growing season. So if you're a farmer, you have to build levees around your land and you have to irrigate it. And if you drive through the area of northern Arkansas that I'm thinking of, you'll see lots of irrigation in the rice fields. Another good example of this, if you read Malcolm Gladwell's book Outliers, he talks about how labor intensive it is for people in Asia, particularly Japan and China, to grow rice, and how tenacious the culture is there because rice production in those areas of the world requires a very intensive 365-day-a-year cultivation of the crop. So read Malcolm Gladwell's Outliers, which does a great job of explaining how production of rice leads to a culture that's very, very focused and very tenacious. Now consider shifting from one product to another, which we call setup cost traditionally in cost accounting. Consider the work involved to switch to corn or soybeans if you're already growing rice. Well, first, you've got to remove all the levees, and you've got to level out the fields. You're going to have to remove all the equipment, including some of those big irrigation pieces of equipment that we see in fields that can be monstrous and must be very expensive to move. So not only does rice require more production, but switching out of rice to another product is going to cause you to incur labor costs, equipment costs, and you can probably throw all that together into setup costs as you either set up or tear down for rice production. And the other one is, well, what if the crop doesn't turn out exactly as you planned in terms of quality? And the article explained that low quality rice is harder to sell than a poor quality corn or soybean crop. So if you have a drought or some type of insect infestation that affects your crop's quality, you may have a tougher time selling a rice crop than a corn or a soybean crop. So think about it, put your farmer hat on for a minute. You've got additional costs and you've got risks, quality risks of growing rice. So you might want to hesitate before growing rice. At a minimum, it would seem, I as a farmer would want to have a higher profit margin on my rice than corn or soybeans, and maybe a lot higher. So just throwing numbers out there, if corn and soybeans had a margin of 10%, I might not plant rice unless the margin was 20%, a 20% profit margin. That way, if the rice production didn't go as planned and my profit margin was lower, I'll make up a number and say it declines to 12% from 20%, I still make more than I do in the other two crops, corn and soybean, which is 10%. So a 20% profit gives me some wiggle room. If things don't go as planned and my profit margin is lower, maybe at the end of the day, my rice profit margin is still above at 12% the profit margin for corn and soybeans. So I might take the risk of growing rice. But the article concludes that lower prices, higher costs, and the risk of poor quality are not only forcing farmers to stop rice production, but the possibility that they'll never go back to it. Now, if that happens often enough, obviously, the production goes way down, the supply goes way down, and prices at some point are going to go back up. The question is, will they go up enough to encourage a farmer to get back into rice production? So that's what I had on the blog, Accounting Accidentally. I do want to remind everybody that I have my Toughest accounting topics, which are an ongoing set of live chats that I do on the topics I'm asked about the most often. This is the current list of topics that I'm asked about the most often. I teach a small 10 people or less live chat on these topics periodically. Here's the cost for the 90-minute session. So if you have an interest in joining, you can email me. Thanks very much for watching, and we'll see you next time.